Good morning, everybody, and welcome into a brand new video. It's your boy David, and I'm only recording this video for YouTube. I haven't been posting my videos on YouTube, unfortunately. I've been covering, just so I can bring YouTube up today, I've been covering the market day to day since Tuesday on X, and I've been covering the close, like as we're about to close, like let's say the last 20 minutes of the day. I've been like covering that, preparing for the following day, right? So this is the video I have that I posted yesterday. Around the 10-15 minutes before close yesterday, and this is the trading plan that I have for Friday. So if you're on YouTube and you just found me on YouTube and you want to, I don't know, a little more details and more analysis, because I post regularly on X. Obviously, the only thing I can post on YouTube is, videos. But anyways, this is kind of the setup that I've been doing this week. I am giving you the levels and upside targets, same with the main supports, the same level to support both, for the bulls and bears. And then I give you downside targets, upside targets, same with Tesla. Also Matthew is really what made me want to make this video. I was going to upload the video that I did yesterday, but I thought, why not just do a new video? So as of right now, we reclaimed 669.77. Yesterday we got the close below 668 or 666.88, which is the first downside target that I have, right? As you guys can see here, it's first downside target. So that ended up happening, and yesterday was a very bearish day, right? We have a bull gap above, right? Which I kind of had I had an inclination that bulls were going to try, try to fill that. First, we needed to reclaim 669.77, and usually my levels, whenever I post like supports to watch, we usually open up around those levels. Like even though we closed below 669 yesterday, and we were in pre-market or after hours. I'm sorry. We were trading a little lower than 666, but which is not a great number, by the way. But anyways, usually whenever we do end up opening up, it's usually around the level that I give, right, of support. And so as of right now, that's what we're going to be looking for going into open today. And today's Friday. Today's the most important day of the week. We get the weekly close today. And let me start off there. Bears really want to get the weekly close below 669.77. The most bearish scenario today going into next week, I think either or is bearish going into next week. But the most bearish scenario going into next week is if we were to get the weekly close below 662.39, right? Which is this year's low, which was formed this Monday, right? I would imagine, let's just say, usually when the most bearish scenario happens, that means shit is gonna happen over the weekend, right? And then as of the last 2 weeks, we've been gapping down every Monday. So, I would imagine that trend will continue. And once again, I'm just gonna continue stating this, okay? Because now that, for anybody that follows the rising wedge, that knows how it works, all that good stuff, that this is completely disgusting, right? In terms of the chart. And I've been stating this since January. I've been stating this since all of February in my videos, and now all of March. 693.33, 689.70 are the two most important levels for SPY. These are the levels that will, let's just say, confirm whether or not we are bullish, right? As long as we're trading below these levels, we're bearish. It's as simple as that, right? Like, let's just oversimplify the stock market here, which is a very hard thing to do. But once we reclaim these levels is when we can start thinking of a bull market, and I know that might be like, for example, we might go from, let's just hypothetically say we bottom here, right? We have a short-term bottom here at the 662 level, and we go all the way back up to 693.33. Everybody and their mom and their dad and their dogs and their cats are going to be like, well, that was the bottom. That is, we have started the new bull run, right? But not until we support these levels is when you go, okay, it's real, right? And that's kind of the mentality I want you guys to have, is these are the two levels that will indicate whether or not, we are actually going to enter into a bull market. Because let's say you miss the buy, right? I'm just, once again, I'm going to run another scenario here. Let's say we do bottom here, and let's say we do start supporting these levels. Then yes, the bull market will start. And you could just buy here, because you're going to make money. Like here is gonna, like, I know people might think, man, I lost, I lost so much money here. We went from 60. You're talking about like a $30 jump, right? You lost $30. Okay. I mean, obviously, you would like the protection is the good thing, right? Is that you bought closer to the bottom. And I'm taking too long in this scenario, but I got to end it now. Yeah, of course, you lost $30 here and you lost the protection in terms of entry. But like, if you were to look at this by the end of the year or by the end of 2 years, and you were to look back at 69333, you're going to see that everything is going to start here, right? And this $30 bounce that you missed, you really just got to look at it as a $30 zone, right? Like nobody never catches the bottom, right? I mean, by nobody, I mean, obviously some people do, smart people do, right? Some people are lucky, some people are smart, okay? But generally you want to buy within a certain zone, right? Like as close as possible to the bottom. And let's just say 2 years later, 1 year later, we go on a $200 run once we reclaim 69333, which is what will happen, okay? You're going to look at 69333 and you're not going to think about the $30 you lost. You're going to think about, damn, I just made $200 or we just, bounced $200 the moment we reclaimed 69333. So, there is no such thing as FOMO until proven, right? Now, if you were to miss out here, then that sucks and you're going to have to wait for the next level, okay? But other than that, as of right now, and I'm saying all this to say that as long as we're rejecting this, we're trading below these two levels, we're going to see 646.96, 640.46. In the video that I posted last week covering the monthly close of February, we got a bearish monthly close. We ended up closing below the levels, which was the close that I was looking for, right? In terms of the monthly close. And I stated in that video, and I believe, I don't know if that was Thursday or Friday when I made that video, but I know it was one of those 2 days. And I literally said that that's going to indicate how March is going to play out. We ended up getting the close below, and the war literally started that weekend, to which we went in to the first trading days of March, right? So as you can see, we're now heading closer and closer to 642.96, 640.46. Obviously, 646.85 is going to be the first target since it's the closest one, but 642.96 is the main target, right? In this whole zone here, I mean, I have it highlighted here for that reason. This is the zone that we want to, look into or pay attention to coming into the end of this month, if not next week, which we potentially could see that. And like just out of curiosity, that would be about a 7% drop, right? Which is not all that wild. 8% at 640. I have a gut feeling that 10% is kind of like the base, the minimum that we should see from this breakdown. And just to give a tease, because I am gonna do a video about this, but I ended up actually, I don't even have to do this. You could just look at this, read. You can pause this and read this, right? I yesterday I was doing something for fun where I'll go here on the monthly chart just so that I can show you guys. I went on and I covered, and this is just for fun. I know this is really messy. Don't say this because I know it's messy. I was literally doing this out of just curiosity because I was curious to see what was going on during the Iraq war, right? Which, funny enough, the Iraq war happened right after the dot-com bubble. This right here, March 2003, was when the war started, which was the bottom, right? I mean, it wasn't the bottom. The bottom was right here, but it was damn near. This was basically a triple bottom here. This one's like, let's say it was $2 above the actual bottom. So, as close as possible to the bottom. But this marked the bottom to the start of the new bull run that led us to the financial crisis in 2008, right? But anyways, I just started charting everything, right? Every major crash or every major event. And once again, just like in the post that I made, if you didn't read the one on X, look how oversimplified everything is. None of these things started by like some crazy complex, you didn't need some crazy robot algorithm AI to tell you, hey man, a crash is coming. No, man, it was just a rising wedge. That's all it was, right? We broke down from one, in this case in the dot-com bubble. And once again, I charted this like as, let's say as not as accurate. I'm going to do a video, by the way, on covering each macro event. That's probably going to be a long video. Maybe I do it one video. Yeah, I might separate it. I might like do it like episodically. Anyways, I don't know. I'll think about it. But as you can see in this one, bulls were supporting this, and this is the monthly chart, right? So every candle represents a month. You know, we supported here we supported, here we supported, here we're showing some bearishness, but the candle still went here. Here we broke down, right? And that was a terrible indication already. At this point, this was the retest, right? We ended up getting the close above, but the following day we ended up tanking, which, you know, we could end up kind of seeing the same thing here, right? Like, let me just, well, yep. Well, there you go. This is where we're currently at, right? And as you can see, this is just the start. And in the minimum of every single drop that we've seen, the minimum is 10%. The second smallest is 15% right back here, right? But the funny thing is, and I cover, and I could even read it here, is that there are 9 major events. 2 out of the 9, Trump was in office, which was the 35.6% in COVID, then the most recently 20.8% tariff crash. So while Trump is in office, we've seen a minimum crash of 20% whenever there is a major event going on, right? And so I'm not suggesting that we're going to see 20% here. And, you know, out of curiosity, let's just see where that would take us. Oh, look at that. Pretty close. Oh, uh-oh. Sorry about that. That's an alarm. Anyways, you know what? I'm not going to lie. Wow. Hey, guys. 24. 24 is my number. I like the look of that. At minimum 22. I like the fact that we're close enough to test this. I'm not gonna lie though, if we get to that 20% drop, I think you just start scaling in. I'm sorry, I'm thinking out loud. This is not financial advice. I'm thinking out loud. This is what I would probably end up doing. At 20%, you probably start scaling in, which would line up with around, you want to talk about 557, and then what would that minimum, and I'm going off the minimum range because obviously this support, we don't have to go all the way at the bottom. And by the way, this started at COVID, this trend line, right? So this trend line has been supported since COVID, since 2022, which marked the bottom for 2022, which was the most recent bear market that we've been in for a while, right? That was an 8-month or 10-month bear market. Or actually, no, bear market goes down from like 20%, right? Yeah, so never mind. It wasn't really a, you know, I mean, because a bear market is only considered once you're down 20% from lows. But we're in a downtrend for 20, we're in a downtrend for 10 months in 2022. That's when I started covering the markets and posting like actively. And yeah, so then we had a 10%. Well, I guess, was Trump in office in 2023? I don't remember, because he came in office in 25. So that means he would have left in 21 potentially, or 22. So no, I don't think he was in office during this time. That was probably Biden. Anyways, so yeah, but the tariff crash, we did end up seeing just the minimum range here. And we could very well see the same thing here, which would take us down to about 22%, which is in line, right? So far, I'm not going to say it's the average drop of all of these situations, but most of them are about 20%, right? 27%, 20%, 21%, right? And then you have the two big ones, 50 and 57%, which obviously these are, dot-com bubble, and then you have the financial crisis, right? So I'm not going to go that far. Out of curiosity, let's just see what that would look like. Oh my God. Could you guys fucking imagine? It's not even wild. 50, I mean, don't get me wrong, 55% is insane, right? And that's just that would be the bottom half of the range. The minimum half would be 53. Holy shit. Wow. You got to love technical analysis because it's so perfect. Like, I honestly thought this would have been more than 50%, and at that point, I'm like, there's just no way, right? But it's right in between these two, right? It would be slightly worse than the dot-com bubble, and it wouldn't be as bad as the financial crisis in terms of, percentage drop. Whew. Let's see what 35% would be, because that's 450. Let's see. Damn, bro, can you imagine going back down to around that 320 to 310 range? Oh man, yeah, I'm definitely gonna do a video on this. Anyways, as of right now, 64296, 640 is our minimum target, right? And that's the target for this month, right? Let's see what happens next month. Hypothetically speaking, if we were to get the close below 642.96, then markets are most likely cooked going into the following month as well. And then from there, we're getting a lot closer to the idea of a 20% drop, right? And Trump kind of has been teasing that this is going to last for another 2 weeks. So, it's possible. It is possible. 2 weeks is a lot of time. I mean, look, when markets decide to crash, it 1 day, 2 days. I mean, hey, Trump likes to be historical. I mean, why not have a 2 week a 2 week crash where it ends up taking us down 20% or maybe even lower, right? It would be historical. Anyways, in the short term, I'm getting too ahead of myself, but we're bearish. In the short term, 66977 is the main level to watch. I would imagine if we reclaim 66977 and we support it, bulls are probably going to try to do that gap fill. And once again, based off the upside targets I have, the first one would be 67434, which is right here. That would mean we filled the gap, right? The bull gap that we did yesterday. But I'm almost inclined to believe that this could be a trap, right? I think a lot of people are probably looking at this thinking that we will fill this gap. And we probably would. If you were going to bet on it, we probably would. But, last year in this scenario, like 2022, where we're in that bear market, where we're in the downtrend for about 10 months, I remember that was very common. It got to a point where, because the last 2 weeks we had these massive gaps that we did fill. Right. And it was a massive run. Like we did it multiple times last week and we did it again this week. And it gets to a point where people get used to that, right? They think everything is that's going to continue happening. And usually they will tease the idea of filling up the gap and they might stop just before filling the full thing. And then we tank. And then from there we go and we test this year's low and potentially break below it, right? So look out for that. Obviously 67434 is the main target. At minimum, if we do end up filling the gap, that means that we tested 67334. So yeah, keep your eyes out for that. But it all in all, as long as if we continue to support 66977 like convincingly, right, and or we see like a bullish pattern be formed, right, like let's say a falling wedge, a bull flag, I don't know, an inverse head and shoulder, like whatever, a bull pennant, anything, right, and it's lined up with this level, then you probably have an indication that, oh yeah, we might have a breakout towards 67434 at minimum, right? The most bullish scenario, I'm not gonna lie, the most bullish scenario I would say is getting the weekly close above 68336, and I highly doubt that happens. But this market is news, is being ran strictly on news, right? And unfortunately, a lot of fake news. Okay, we're having a lot of news that is quote unquote good, and then being confirmed later that it wasn't even real. So that's a very dangerous game to play. But even if we were to get the weekly close above 67434, 67803, in the short-term view, that's not bad. But in the macro view, we're still, what happened this week, which is why I was covering this day to day on X. What happened this week to me is the confirmation that we needed. I mean, we retested the rising wedge support trend. We rejected it, and ever since then we've been going lower. So, I do think that like the odds of today, us closing below 66977 is pretty solid, first of all. And I do think that there is a pretty good chance that we close below 66239. I'm not going to go that far because, I don't want to add to like the fear, but this level, I'm sure we'll test and if not get close to it. And obviously, if we end up getting like the double bottom here, we're gonna have like this short-term run, maybe like we did here, like last week. We kind of got that with that 669 here. That was Friday of last week. I believe this was, I don't know if this was Monday. What was the third? Let me just check. The third was Tuesday. Okay, so Tuesday and Friday. We kind of had that double bottom here. We did end up going lower on Monday, but obviously we ended up reclaiming the level and going much higher, and a lot of investors was like paying attention to that. And then we ended up going higher the following day and so on and so forth, but it wasn't great. We're doing lower highs, which is absolutely bearish, right? Just look at last week versus this week. And if I'm just saying, man, even if we close, like that's what I'm saying. Like if the weekly body were to close around 669, 666, which that's probably going to be the level we close at, to be honest. That right there is, if you don't believe in technical analysis and everything, listen, if we end up closing at the 666 number, if you know what that number is, which most of you do, that right there is that's your confirmation. All right. That's your confirmation that shit's really about to go down. So yeah, I'm gonna leave it at that with SPY. Let me go ahead and do Tesla as well, because this video is already 20 minutes. Let's see where we're at. 399. So yeah, with Tesla, let's go ahead and scroll down here. 39628 is the level to watch. We're currently trading above 39628. I did have this rising wedge here. I guess since we're above, why not? Just for argument's sake for bulls, let's just say this rising wedge is still valid, right? Because we are currently trading above it. Let's go ahead and take a sneak peek. Okay, well, I hate when that happens. Anyways, we're up here. Right, this is where we're gonna open. Now, if we break below 39628, and that's in line with the fact that I adjusted this, right? So you gotta keep in mind here, we're in a rising wedge, which is bearish. Even though this is the short-term time frame, this is a 2-hour. If we end up breaking below 39628, that means we break below this rising wedge support trend, and that means you're cooked. 390.59, ultimately 390.59 for Tesla bulls, and I'm bearish on Tesla regardless of war, regardless of economic data, regardless of anything. To me, Tesla just really wants to go to that 347 level in general, right? And last week we broke below and rejected the rising wedge support trend, which is absolutely disgusting. And this week we ended up rejecting the 415 level, which is the main confirmation level that guys did not want to reject, or bulls, I should just say. And ultimately 390.11 is the most important level now. This level will continue to leave the door open to retesting 415 and 412. And that's why I say, like, at best, bulls want to get the weekly close above 390.11. But I'm not gonna lie, it's looking a lot more that we might want to get the weekly close below 390.11. And if we do, I think that's the confirmation that we end up seeing 356.53 next week. At any point next week, if not Monday, Tuesday, I'm not saying it doesn't matter what day of the week. That means next week there's let's just say a 50% chance we see 356.53, right? And once again, out of curiosity, let me go ahead and see how low we are currently. So Tesla's down 23%. So Tesla's in a bear market. First of all, they're in a bear market already. Yeah, even at where we are right now, 20%. That would take us down to 28%, 30% here at 347.58. 322 is about 35%. Yeah, so that's in line with Tesla. Can't be too mad at him. Anyways, if we end up getting the weekly close below 390.11, I already said it, 356.53 is easily the main target. And also, the reason why 415.50 is a very, very vital level. It's very much like the SPY level at 693 and 689. This level is what confirms that we're going to 347.58. Right? So as long as we're trading below and rejecting this level, that means 347.58 is the main target, which this is the level that for this month, this is the level that we're targeting. Okay, this is the target for this month. So it doesn't have to happen next week, but within this month, we most likely see this level, right? As long as we're trading below 415.50. So in chart wise, it's disgusting. I mean, it just is. I mean, I think this is the worst. This is probably the greatest setup for a short, you can get. Usually it's not as clean as this, but in this case, it really is that clean. So yeah, everyone pay attention to that 39628 level in the short term for today. The macro view, I already gave you 390.59 is the most important level to watch. Once again, I'm not bullish on Tesla. Like, if you ask me, hey, what's the bullishness on Tesla? Like, let's just say we don't get the most bearish scenario close at below 390, below 396. As long as we're getting the weekly close below 412 and 415, that's really what bears want, because that's where the smart money is shorting, right? I mean, obviously a lot of them are shorting up here, but I'm saying now, right? This is the new level to short at. And we've been getting 4 weeks. This week will mark the 4th week, getting the weekly close below 415.50 and 412.75. So that is the greatest indication that that these are the main targets. Okay. Now, if all of a sudden we get the weekly close above 412.75, 415.50, then all right, great. Be bullish. Expect 430. Expect 450. That happens. That will happen if we end up supporting 415.50. And they tried here. Let me see what close we got here. Yeah, 417. So we did get a weekly close here above, and they did try to go to that. Well, we did see 436. But it'll happen if you support these levels, right? But yeah, as of right now, it's not looking great. Whether you're what's the word? Whether you're a price action guy, this is terrible. Whether you're a technical analysis guy, this is terrible. We're already down 20+%, and we're not getting any serious bullish momentum. So that's terrible. Doesn't matter what sort of analysis you want to use. Everything is really bad for Tesla. So I honestly don't care what happens this week. There is not a bullish scenario unless we get the close above 415.50 and 412.75. At best, once again, getting the weekly close above 390.11 will continue to leave the door open to retesting this level, which I guess is good, right? But it's almost like instead of ripping off the bandage, you're slowly taking it off, So yeah, that's my view on Tesla. I don't like it at all. But as of right now, we are above my level at 396.28. So you guys can't expect 405.46. Let's see what my targets are. So 487 is the first one, 405.46, and then 412.75. So we're in the same boat, right? And as long as, let's just hypothetically say we do end up going all the way up to about 411 up to 412. If we fail at supporting 412, if we fail at we just continue to reject this resistance trend, which is a falling wedge, right? This is a bullish pattern, right? But it's been rejecting bulls since December 22nd. So you got to respect this trend, first of all. And second of all, if we continue to reject it, at some point we're going to go and retest 381.40, right? At the very minimum, which this was where we marked the bottom for this week. And this has been, there's not enough touches. There's 1, 2, 3, right? At the very least, the one thing that makes me want to respect this support trend is that this did mark the bottom, right, for Tesla so far this year. But it's been held up 3 times, right? And as of right now, this is 381.40 is the first main target. Doesn't have to happen today. It could, based off news, since that's how this market has been running. But I'm pretty sure we'll end up seeing 381.40 again next week, right? And then that will be a new video. I'll be covering what happens. But once again, 347.58, 356.53 is the main targets currently for Tesla. The confirmation that we're going to see 356.53 next week will be getting the weekly close below 390.11. All right, so I'm going to leave it at that. I hope you have a great day. Actually, let me go ahead and check VIX. Oh, let me go ahead just quickly, 25.48. Yep, okay. Yeah, man, we saw a high of 35.30. Nice. But we're continuing to support 24.98. As long as we support 24.98, markets will continue to go down. If we end up getting a close above 29.53, just know. I mean, just look at the history of VIX. It doesn't usually close above 29.53. And when it does, that means market still has some room to drop. So I'm going to leave it at that, everybody. I hope you all have a great day. Don't overtrade. Don't do anything stupid. Follow the plan. Don't trade if you don't have a plan. Okay. This market is not an easy market to trade right now. So, don't be overly confident. It's the worst thing you can do. Try to protect as much money as possible because, potentially depending on what happens, hey, there might be a pretty great buying opportunity. So, at least try to leave that door open. Okay. But, yeah, I hope you have a great day. I hope you have a great weekend coming in. And, yeah, goodbye. Love you. Mwah.